Hello and welcome again on Stocks Advisor channel. In today's episode, we'll talk about NIO Incorporated, ticker name NIO, traded at New York Stock Exchange. Well, NIO is also very similar, showing very similar pattern as Tesla actually, and you see that looks like there is a major correction taking place, and especially in the case of NIO, its growth was very fast, too fast. Let's say for half year, you can see it went all the way from below 5 to above 57. So it's really more than 10 times growth. And of course, once the company is not capable to catch up with, let's say, overall sales turnovers, but its market capitalization is enormously huge and much bigger than the turnover prices levels, of course, some corrections starts to take place because people start to reconsider what's going on and actually what's happening. It's not that it's a panic sell. You don't see it, of course, as well. If you look here at the volume, you can clearly see. Let's look at bigger magnification. So if you look at the volume, you can clearly see that actually there is no panic sell. Of course, the volumes are still okay. If we would look in the If you look at the volumes, of course, there is no indication that there is a panic sell. You can see that the volumes are still okay. Let's look at the bigger magnification. You can clearly see here that the volume levels are still okay. They are still flat. So it's not that something is massively exiting the stock. You can see on the right bottom here. It's just kind of healthy correction according to all indicators. But we need to keep in mind one thing, the difference between moving average 20-50 that are following close to each other and 200, which is the red line going below. And by the way, here on the left, you see the legends. So the difference between those is incredibly high. And this was kept long time like this, creating this so-called parallel shift or parallel move pattern. But usually this parallel moves of this big arrow, which is there, it creates a pressure kind of, it works like a vacuum actually that could suck in the price, or speaking otherwise cause a normal healthy correction action. And the depth of the correction will depend, of course, later on how the market will react, but we need to be preparing for this. And also, by the way, if you look here at the entire actually history of the chart, you can see at least for half a year, it's the first time we did Pierce moving average 50, the blue line. This is also an indicator that will trigger a lot of, let's say, discussions, a lot of attention of people. So many traders, especially those who are more like keen for technical approach, they will start slowly leaving the stock and hoping for re-enter at the lower levels. So, and that's also what we do. We want to find a good wave to enter. Therefore, we need to be preparing ourselves. If you look further, what would be the level to re-enter? Of course, here, well, it's clear that the most interesting one would be looking at this triangle that took place from November to end of December. And therefore, we can just start entering at the tip of this triangle, which would be actually below 45. So that would be the first price target to enter. And the way to trade, so it's a 45 and all the way to the bottom of the triangle, which would be 37.50. So this will create our first entry opportunity, S1, S2. And if you would write, so this would be the first circle, and let's write it here for us as a note, the levels. So these would be 37.50 and all the way to 45. So this is 37.50, 45. That's the level to enter as a first. Why is it still, let's say, why there are more indications that this is indeed a correction taking place? And for that, you really need to look at RSI, for example. It's not just that we're sitting in the middle of RSI that we observed here by December or by end of January. You can clearly see RSI is going to very strong overbought area. Oversold area, so it's now 37.50 going really low. This, of course, causes also for those people who are more technically trading effect of leaving, that they need to, let's say, leave and wait to re-enter the lower levels. Also, if you look at MACD, this is also clearly showing major correction kind of behavior. It's a double negative wave. If you look here, looks like it's almost nearest to its bottom, but still it could go even lower. So the bottoming effect is not yet observed. Here, if we look at bigger magnification, you can see that the bottoming effect is not yet observed. And once this is going to happen, then we could say, okay, this is end of correction and we could have some price to go higher. But before this, we need to wait and we need to see how it will go down. So with this being said, actually the first level to enter is S1, S2, and indeed RSI going to oversold area again reconfirms our, let's say, estimations and expectation that this is really a major correction to start. So if this is the first level to hold it, then of course we will see the restart from there of the price. And then speaking of taking profits, if you enter there, you can make it of course higher, but we advise at our channel 10 to 15% profit taking, and 10 on slowly moving charts and 15 to fastly moving charts. This is also the way we assess if the analysis was, let's say, correct. If it was successful, that's how we decided. And later when we will provide the statistical videos for 2020, but also for first quarter of 2021 on the opinion videos that we provide at our channel, this will be our target to decide if the analysis was correct or not. And then if it was not, we will also look the, let's say, lessons learned session to understand what actually went wrong. So with this being said, that's the level to enter first. And then should we go lower, this can be then a stronger correction, or even with some negative news coming in. Also, we need to understand that this could be also entire market reaction, or the sector, let's say, not really market, but the sector reaction for these kind of companies. If this is happening, then we need to be prepared for the next levels. Of course, obvious levels are here between, let's say, just below 30 and 25. Let's write it here. This would be then 25 and 29.80. The next level to buy within this new channel, which we can call therefore S3 and S4. So why this is one also is good channel to enter, because moving average 200 by that time will be just on the top of it, so it will create additional double support here, and the price really should recover, because then it's really not expected we go very low. Anything lower than moving average 200 should really mean some negativeness, really negative, let's say, I don't know, news or something like that. It should be really huge thing. And if this is going to happen, well, here we have another 2 triangles, which are working as a very strong support levels, which were formed in July and September. But this is only if we go that low. So only if negative catalyst comes. And if this is happening, these triangles, the tips of these triangles would define us actually the last support, the last standoff for this stock, which would be S5, S6 levels. And if we write these in numbers, these would be, let's say, something like 1330 to actually, let's say, 1790. So this would be the level, quite broad though, but also the volatilities here would be enormous if we really decline that low. But again, this is not that it's predicted we go there, it's just, let's say, the risks mitigation, and it is within the philosophy of this channel and giving opinions. So we usually do so-called mixed analysis, where we make our analysis based on 3 pillars. So one is traditional technical analysis, second one is non-linear average down approach, when we want to average down non-linearly on the appropriate support resist channels, because then we want that your average price is very close to actual price. So once the rebound takes place, you can make the profit up to 10-15% as a target profit for our videos. And the third pillar is actually risk mitigation based on possible negative catalysts coming in, and these usually are very hard to predict, because this is internal, which can come from the company any moment. But if this is happening, you usually can at least anticipate to how low it will go, based on previous, let's say, top trading channels or patterns, like triangles here in this case, for example. In other situations it could be something else. So we do it always for every particular stock analysis on spot. So with this being said, that's how we approach it. And that's why we decide these levels. This is mainly risk mitigation rather than expectation. And again, once we rebound, always you can stay, of course, longer if you like, but our philosophy, and we trade always 10-15%, not more. Then either re-enter or check other videos, other positions. There are many opportunities on the market. So try to develop positive experience, positive trading, let's say, behavior rather than trying to become rich from one trade. Usually this is kind of a recipe for disaster and the reason why many beginning traders fail the first year of their experience. So with this being said, here in the rectangular you see actually the numerical table how to play. Here on the right you can see actually depicted the same but in the levels on the chart. If you like more this one or that one, up to you. You can choose, you can make a screenshot of this one and use it as a trading card. And speaking of nonlinear averaging down, here it's still positive, so we advise 1-2-2 strategy, meaning that the funds you would like to play here you split in 5 portions, and then you can buy with 1 portion in the first level. Should we go lower and show a very strong correction, you can buy with 2 portions in the level of S3 and S4, and of course if some negative catalysts come, then you can buy again at S5, S6 level. This should be the best optimization for actually mitigation of your risks to lose overall at the end of the trading. Yes, it might take longer time, and that's also that we understand in our analysis, in our approach. Once we go lower levels, you can stay longer in the stock, but then also once you approach to stronger reversive point, also let's say the chance to still exit with the profit is also increasing. So our philosophy is better to wait a little bit longer, but with higher chance to finish your trade with positive outcome rather than taking loss here faster and then going somewhere else and again actually entering similar situation without optimization towards possible negative outcome. So that's the philosophy we follow, and that's usually how we make our advices. Therefore, this one is for NIO, finished for today. This is end of current episode. With this being said, good luck with this one. Also, let's stay connected. Please don't forget to subscribe to our channel if you're first time watching this video. And then see you at another episodes of Stocks Advisor channel.